Hello options traders and welcome back everyone. I get a lot of questions from clients asking about, hey, I'm in this option strategy here and I'm not real sure what's going to happen. I'm a little nervous that the stock might fall 2 or 3 points. Or how much profit will I have if it rises another 2 points in the next day or two? Well, those questions are actually quite easy to answer because most of your option brokers provide an analytical tool that will give you a digital version of a profit and loss diagram. Now, for those of you who don't know what a profit and loss diagram is, I have a separate video on that topic, and I will include a link in the description below that you can use for reference. But any of your good options brokers should provide some type of a tool that allows you to see your various profits and losses under various conditions. Out of all the brokers out there, and there are a lot of good ones, I've never seen anyone who has anything close to Thinkorswim, now part of TD Ameritrade. So that's what I'm going to use for this video. However, even if you don't have Thinkorswim, that's fine as long as you have some type of an analytical tool. That's the important point. And if you don't, you should probably look for a different option broker. So let's go over to the Thinkorswim platform and take a look at the Analyze tab to see why it's such an invaluable tool. So here we are in the Thinkorswim platform, and yes, I know it can be a little intimidating if you've never seen it before, but it's actually not so bad once you train your eye where to look. Pretty much true of all brokers' platforms. I do offer training classes in the Thinkorswim platform for those of you who have it and are looking for further training. But for this video, let's go up here to the Analyze tab right here. And right now, we just have nothing for our graph because we haven't actually analyzed a specific trade, which could be anything from very simple shares of stock to complex condors or double calendars, option strategies of any sort that you want to put in here, or even custom ones we can analyze. So how do we do that? Let's come up here. I've got NVIDIA already loaded, so let's use that for the underlying, and then just choose Add Simulated Trades. Click there, and it brings up the option chain down here below. So let's say that we just want to buy this August 19 option right here. It's got 29 days till expiration. Click there to expand it. We have several strikes to choose from. I can expand that list as well from up here. I can also sort this according to various strategies. So if I wanted to look at vertical spreads, calendar spreads, butterflies, I could do that as well. But for this video, let's keep it simple and just look at a single call option position. So the stock is trading for just under 165 right now. So let's just say that we wanted to buy this 165 strike right here. So I just click on the asking price, and that's going to load up a hypothetical trade down here in green. Shows that we are buying 5 contracts, NVIDIA, August 19, 165 call. I can also change the price. This is the current market price, but maybe I think I can get it filled for $6 even. So let's just go ahead and do that for the demonstration. I'm going to make that 6. So I can lock in whatever price I want. I can also change the number of contracts. If I wanted to analyze 10 contracts, I could just change that to 10. I can also add and subtract right here. So let's make it 10 just for the demonstration. And then once we have our trade loaded here in our simulated trade, I'm going to go back to the risk profile, which is up here. Click there. And so down below are the 2 risk graphs. These are the profit and loss curves at 2 different points in time. Right here in blue is the curve that shows the various profits and losses that will occur at expiration. And in purple are the various profits and losses that will occur today. Before I show you how to read these further, take a look down here. These are the various stock prices. And if we left mouse click here and drag to the left, it allows us to zoom out. I can click inside the graph here to recenter it. I can also click on these prices and drag to the right, and that allows me to zoom in. So I can get some very detailed looks here. So how do we read these graphs? Well, first of all, understand that this gold line right here is the current stock price. And if you look down here at the bottom, it shows 164.68. And you can see it changing. It's a live graph. And so it's showing us where the stock is currently sitting on our risk graph. So let's say that we just put this trade on. Again, that was buying 10 contracts at a price of 6. What's going to happen to me today if the stock, let's say, gets up to 168? Well, it's very simple. This white line that you're seeing right here is being controlled by my mouse. So I'm just going to scroll up here to the right until I line up with 168, or at least get pretty close, as you're seeing down there in that little white box. What I'm going to do from there is to look straight up to the purple line and look right there in that little white number, 1796 and change. That's the expected profit we would have if we bought these 10 contracts for 6 and the stock went to 168 right now. We'd be up about 1,800 bucks. Now understand that that's according to a pricing model. It's going to get you very close in the real world under most conditions. But it also requires that it happens right now, not 6 hours from now, not 3 or 4 days from now. It's talking about today, that we need a very fast, aggressive move to get us up to this 168 level, and this is the expected profit that we would have. What if it took all the way until expiration to get to this level? Well, look down here at the blue graph. That's your expiration curve. And to find the answer there, look over here to this box in the left. You'll also see that the two lines are color-coded over here. The purple line shows that we are looking at valuations from today. Today is July 11th of 2019. And then the blue curve is showing that it's valued at August 10th of 2019. So what it's saying is that if we hit this 168 mark at expiration, I'm going to be down about 3,258 bucks. But if it happens today, I'm going to be up right now, looks like 1,760. So it's very simple to figure out what is likely to happen in your position today or at expiration. Just simply move your mouse and you'll see these white numbers right here change, showing exactly what's going to happen at these various stock prices. You'll also notice there's a little red hash mark right here and another one over here. Those are your break-even points. The break-even point here on the purple line is where we need the stock to be today to break even. And the one here in the blue curve is where we need the stock to be at expiration to break even. Now that's good information, but of course the information that most traders want to know is, well, what's going to happen next week or even tomorrow? And I think the stock might be up 3 points or down 3 points by a certain point in the future. What's going to happen to me then? Well, good questions, and it's very easy to answer in the platform. What I can do is look down here to where it says date. Today's date is July 11th, so that's the default. But let's say I want to go forward in time to July 12th. Click this little plus sign, or I can click the calendar right here and choose a date that I'm trying to look for here. So let's click on July 12th. And it's hard to see, but that little purple line shifted down ever so slightly. And so now it's going to give us new numbers. So to see it move, let's come back down here. I'm going to advance the clock. Now watch the purple line. And as I click, you'll see that with each passing day, it's getting closer to the expiration graph in blue. So that means we're going to get different answers. So what is this showing us? Well, right now I've landed on August 6th of 2019. So if we were on that date and the stock price, let's say, gets up to 168, roughly right there, I'm going to be down about 1,935 bucks right there. If it happens at expiration on the blue curve, look back over here, I'm going to be down about 29.25. So it's very simple to figure out what's going to happen at various points in time. To get back to today, choose your calendar. Click right here and go to today. Now you'll also notice that there is a gray box right here. And what this gray box is showing is the expected range of stock prices over a given time period. So for example, let's come up here to this date box right here, and I'm going to choose the date. Let's say I'm going to make it 7/14, 3 days from now, and you'll see that that gray area there got wider. And what that's telling us is that as more time goes by, or as we allow for more time on the clock, there's a wider range of potential stock prices that could occur. So where is this coming from? Well, it's coming from a pricing model, And it's also a statistical estimate based at the 1 standard deviation level, which is right here at 68%. So what we're saying is that if we had thousands of stocks just like this, over this period of time, 68% of them would be somewhere in this gray box on this date, on July 15th. If I want to have more confidence, I might want to go out to 2 standard deviations, which is 95% of the area. So let's change this to 95. And you'll see that the gray box now got really wide. We have to zoom out a bit. So for NVIDIA, between today and July 15th, I'm 95% certain that the stock's price will be somewhere in this gray box on July 15th. So I'm going to reset it back here to 68%. So it's kind of nice. I can just toggle forward and see here are the likely stock price ranges that I could expect at a certain point in time. Now it's also cool, I can come down here and value my option down here. So watch what happens to the gray box as I advance to tomorrow. Now you'll see the gray box shrink because there's less time remaining. So we're saying if it's as of 7/14 and we're valuing on 7/19, this is only 5 days worth of time. If I go to 7/15, you can see that the potential stock price ranges here is starting to fall. Another really nice feature on the thinkorswim platform is that not only can we look at various profits and losses, we can look at our Greeks. So what we can do is to come up here to where it says metric, and you can see that right now we're looking at profit and loss since we've opened the position. But if I expand that, I can see delta, gamma, theta, vega, and rho. So let's choose delta, for example. What is this showing me? Well, I read it in a similar way, but instead of getting profits and losses, I'm going to get deltas. So the purple line shows me for the date in question. Now notice that I've changed it to 7/18 over here in purple. If I want to bring it back to today's date, I need to choose go to today. So the purple line now shows me my deltas as of today at various stock prices. So for example, let's say what happens if the stock were to get up to 168. I find 168 down here below. I look up to the purple line, and it tells me that I'm going to have about 604 deltas. So in other words, even though I'm potentially controlling 1,000 shares, right? We bought 10 contracts. Right now, today, it would only be behaving like about roughly 600 shares. How will it behave if it gets to this same stock price at expiration? Well, trace a line up to the blue curve. That's your expiration graph. Look left, and there you go. It says that we will now have 1,000 deltas, or essentially be controlling 1,000 shares. So I can look at various what-if scenarios. I might say, where would the stock price have to be today before I see 700 deltas? Well, now just watch this little white number here and find 700, and it's going to be somewhere, let's say right about in here. And then I look straight down. I would need a stock price of about 172 today before I'm going to have 700 deltas. So those are some of the basics of how to use a profit and loss diagram, what's called the Analyze tab in thinkorswim, but you can just get so much great information about what's going to happen to your position, no matter how complex it may be, at various points in time. And when you have that information, you're less likely to get shaken out of a trade because you don't understand the nature of the option strategy. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and a brand new strategy lab for 2019 at optionsaToZ.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.